Hello everybody, welcome to TraderMerlin Show. It is your Thursday edition. Getting ever so close to the tail end of that week, the tail end of the week. Today's going to be a little bit different show. I've had a ton of questions over the past week or two that have been all revolving on cryptocurrency. So that will be the topic du jour. It's really kind of an AMA or Alex, an Ask Me Anything regarding cryptocurrency. And I'll try to answer them the best I can. But just so you guys understand, I do have a class on cryptocurrency, which obviously I'm going to, the real deep dive details, nuts and bolts stuff, I will keep for that. But I will definitely try to, at a high level, go over some of the questions you guys have. Also, for those who might be interested in crypto or just a free class, down in the links down below the video here description, I have a free cryptocurrency class, 6 videos that was produced for Online Trading Academy. Again, very high level about why crypto is important, the mechanics of transactions, DeFi, etc. And if you're interested, there's a lot more there, obviously. So let me kick things off with something that has nothing to do with cryptocurrency or digital assets whatsoever. As you guys know, I enjoy doing challenges. I think they're fun to kind of challenge yourself for 30 days of anything, whatever that may be. And I have to get back in shape. So I started it back up. I have my December challenge on here. I'm not sure why my screen has always been so off recently, but let me fix this so it looks better. Here we go. My December challenge, I'm going back to 100 push-ups. So if anybody would like to join me, you can email me at TraderMerlin@gmail.com. Tell me what your challenge will be. Maybe it's study for an hour a day. Maybe it's run for 30 minutes a day, read a book a month, whatever the case may be. Put something down there and challenge yourself to meet some goal. We all do this for New Year's, right? So, I'm going to get in shape, whatever, and most people give up by the time they get to February. Pick something, let's stick with it for 30 days and see how it improves and changes your life. So hopefully we can get some of you guys to fill out this screen here because I feel all lonely all by myself doing 100 push-ups a day. And I'll tell you what, after the first day, I just started yesterday, obviously sore, pretty damn sore. Okay, let's get into the crypto stuff here. So I wanted to start off with a silly one, and not to call you out on it, Scott, but I've gotten a lot of these types of questions, and it kind of drives me nuts. Scott says, what crypto will 10x this month? Hell if I know, Scott. And honestly, I'm not looking for the 10x. Granted, I would love to have as many 10x or 100x's as possible, but in order to get those, generally you're taking a lot of risk. I think with crypto space, it's about evaluating the different market segments. One of the things we did this morning in the Crypto Investor Live program is talk about building a portfolio and constructing a portfolio. And as you do that, it's like, look across the spectrum. My portfolio is built to attack a wide variety of different potential markets I think are going to do good. So what will 10x this month? I don't know. I think there's definitely some companies in the Metaverse space that will probably do rather well this month. And certainly it's getting a lot of attention in the Metaverse talk track with regards to Facebook and etc. But I don't know. I don't know which one's going to 10x this month. To me, that's almost like a gambling question. You have to ask yourself more a question of which projects or which cryptocurrency initiatives am I interested in? Why am I interested in those? And which ones will be around in 10 years? That to me is a much bigger play than trying to get 10x in 1 month. I'd rather get 1,000x over the next decade out of these things. So I don't have anything specific there to tell you other than that's almost a gambling approach, and that's not my cup of tea or how I approach things. So I'll skip right over that question, but I thought it was kind of funny. Thanks, Scott. Valkyrie says, if you're in the US, to be more specific, which exchange can you buy Star Atlas from? All right, so one of the things that everybody has to understand with cryptos is all of these different exchanges, so Coinbase, Kraken, eToro, Poloniex, Binance, you name it, KuCoin, they all have different assets. Hey, Chris, good to see you. They all carry different assets. And while most of them are expanding their selection as quickly as possible, there still are some that are hard to find. So, for example, Star Atlas is a cryptocurrency that is on the Solana blockchain. Oh, hey, say hi to the Pops for me. Hi, Norm. Star Atlas is on the Solana blockchain. And remember, we talked about why that's important. Ethereum, 15 transactions per second. You have the most ridiculous fees you've ever seen in your life for something right now. I told you guys yesterday, I tried to make a $100 transaction, and it was $19,000 in fees. That is just idiotic. So what's happening is they're moving to different networks. So Star Atlas is on the Solana network, which is a lot cheaper, but it's also a little bit harder to find the securities on it. So one of the things you can do is if you know it's on Solana, you could go out to something like Radium. Let's see if I can bring that one up for you guys here. Let's go to that screen. Radium is just a liquidity provider, but it's basically a decentralized exchange on the Solana blockchain. So you could go to Radium and go here to trade. There's trading. All right. And then under the market, I'm going to go to Atlas. So you can see right here, there's Atlas is the ticker symbol. So I can buy it with USDC or I can buy it with the Radium coin. Now it gets a little challenging with this, right? Because if you are buying with the Radium coin, that means I have to take Solana and I have to convert it to Radium and then take Radium to buy Atlas. So it becomes a little cumbersome in my opinion to do it, but I think in the next few years things will clean up and become much more streamlined and fluid with regards to buying and selling kind of these rare tokens and coins. So that's the first way I would do it. There's for if you're not familiar with Radium or Solana, these networks may not be as liquid as some of the other ones. So we've talked about Ethereum and how liquid most of the markets are for Ethereum, and that's okay. But you look at something like Cardano, and some of the exchange markets or swap markets are going to be a lot less liquid. And that presents problems because if you try to buy something in a low liquid environment, you suffer from slippage. Now, right now, the biggest exchange out there for Star Atlas, which is the cryptocurrency in question, actually, I don't even call it cryptocurrency, it's the token in question, if you will, is the largest one out there is FTX. So you guys might remember we looked at FTX, which has been sponsoring a lot of sporting events and games and actually athletes. Surprisingly, FTX landed Tom Brady, Steph Curry, Shohei Ohtani, of the California Angels, and they got somebody else. Basically, they got the top athletes in almost every sport. So here is the FTX platform. And so if I go to their exchange, and maybe it's probably going to try to make me sign in, which would really be just annoying. But I can go from, let's say, let's go from Bitcoin into, see if it lets me do this. And we will type in Atlas. So it won't let me go from Bitcoin into Star Atlas. I'll probably have to use something like USDC into Atlas. I have to dig deeper, but I know you can get it at, you can definitely buy Star Atlas at FTX. It may not be available in the US, which means we have to do what? Means you're going to have to go to a VPN and potentially go into a different exchange or go to ftx.com because they have more features, more flexibility, etc. Alex, FTX got all the umpires. Right, because they have to wear all the little FTX logos now, right, in the sport? I'm telling you, that ain't cheap. Those guys spent a lot of money to get those athletes. But FTX is one. Radium would be another place where you would find these ones. And again, we talked about this in the Crypto Investor Live program this morning, and I'm not going into detail on exactly how you figure all this stuff out, but when you are presented by people on social media shilling shit coins, and I say that not antagonistically, everywhere you go on the web and social media and Instagram is people just shilling their projects or trying to get you to buy some shit coin. Most of them are exactly that. They're called shit. And as Echo points out, CoinMarketCap will give you the different exchanges. You can see kind of where things are allocated. That is certainly a big help. But as you go and try to find, let's say you got XYZ token, right? And you're saying, well, where can I buy this? You can go through and look at the different exchanges and see which one has the greatest liquidity. What I found is a lot of times people are on one brokerage firm, and I'm on, broker A, and they're trading crypto there, but it's like one of the lowest liquidity markets for the coin that they want to trade. So just like I would tell you, if the stock you want to trade is very illiquid, don't trade it. Well, the difference here is in the equity markets. If we go to the stock exchange, it's centralized, right? If I'm trading a NASDAQ security, I'm going through the NASDAQ, and everybody can see the same volume, same liquidity. With crypto, imagine, I'll give you a simple example. Imagine every state capital in the United States is the only place you can trade cryptocurrencies, right? So you'd have to go to Sacramento. I'm out here in California. I can only trade through Sacramento. And you want to go trade, I'm trying to think what other capitals are of other states. Is it Seattle or is it Olympia? Boy, don't get me on a capitals test. But let's say Sacramento's the only way I can go. I would contact Sacramento and I would try to place my cryptocurrency rates. But if Sacramento says, hey, we're not going to have Star Atlas, or we're not going to have Tether, or we're not going to have the Binance, Bitcoin Cash, that's their discretion. Think of every state capital as a separate exchange, and each state may have different, not only securities to trade, but certain liquidities as well. So maybe Star Atlas is available at the Sacramento office, so people are connecting there. But the real volume is, in Texas. It's the Texas capital. Or let's just go Denver. Make it easy on me because I can't think of all the state capitals. I want to say Dallas, but for some reason, yeah. Anyway, so we'll go to Denver, and that's, let's say, the biggest market for Star Atlas. I'll probably want to trade there because I have better liquidity. When I want to get in and get out, I won't get slipped as much on price. Okay, so Valkyrie, that's how I would approach that. If you're California, it's about searching for which exchange has the most liquidity right now. FTX is the most liquid for Star Atlas, and then you've got Gate.io, and then you have Radium, and Radium is pretty big because that is the DEX for the Solana network. All right. Next, what do I think of Polygon? All right, this is a much more complicated question because you have to understand the basics of markets, or basics of the layering technology. So I'll try to keep this very basic. And I'm going to use, I'll use Ethereum as the example. So Ethereum at its base layer is simply a blockchain, right? It's designed to show this transaction went to here and this money went to here and who has what. That's really pretty much the same basic functionality that Bitcoin has, right? So at its core level, the blockchains hold a lot of the same information. Where Ethereum changes is they allow smart contracts to plug into their blockchain, creating a much more robust network. Now, the challenge for Ethereum and Bitcoin as well is their networks were started many years ago. I say that almost sarcastically because really 2014 or 15 for Ethereum isn't that long ago, but it's an eternity in crypto years. So with Ethereum, it was designed with different protocols, and right now those protocols are being challenged because they don't allow for a lot of transactions per second, meaning if a lot of people use the network, it can bog down the network significantly. And that's one of the reasons we've seen the fees for Ethereum skyrocket, right? And to pay $19,000 to send $100 is idiotic. I could literally pay somebody to fly first class, get on an airplane, and go deliver that product or service for a much cheaper price. So when that network gets so bogged down, what's your solution? Your solution is to change the code of the core blockchain. But that opens up a whole set of risks, right? If you start to change the code while the train is rolling, so to speak, especially something that significant to allow much bigger blocks, then you run the risk of things happening to your network which could collapse it. So that's too risky to do. So what you get is a second layer of technology, and they call them layer 2 technologies. Now what a layer 2 does is says we're going to perform a whole bunch of transactions up here, outside, away from that blockchain. And then once we have enough of them or certain conditions are met, we'll now post one transaction to the blockchain. And inside that one transaction, we could have 1,000 transactions. So it's trying to alleviate the pressure from a bottlenecked or bogged down network. Bitcoin, you're talking 7 transactions per second. That's slow, very slow. But the good news is Bitcoin isn't used for daily transactions and lots of transactions. So there is a layer 2 technology for Bitcoin. It's called the Lightning Network. There are some others out there, but Lightning is the number one. With Ethereum, you have a much bigger challenge because right now NFTs are some of the hottest topics in the world. I think I showed you guys, I was playing Decentraland. And in Decentraland, you can buy and sell good services. You can make products and go to sell them at Marketplace. But with every transaction you make, you are using that Ethereum network. Now, when I'm doing by myself personally, there's not a lot of transactions going on. I'm not a very active buyer or seller of NFTs in that space. However, you multiply that by 1 million people who might be using this platform, and all of a sudden, you really start to bog down Ethereum's network. And that's just one example with Decentraland. You have dozens of other Metaverse games where people are playing. You also have NFT marketplaces like OpenSea and so many others where there's thousands of transactions going on. Their network is screwed. Long story short, what do I think of Polygon? Well, Polygon, also known as Matic, is great. I think what they do is they provide a layer 2 technology. They help alleviate some of the stress that's on the Ethereum network. Now, it's still bogged down to hell. It's still slow as crap right now, but it's getting better. Now, here's the only area that concerns me about something like Polygon. If I have Ethereum, which at its core is just a blockchain that aggregates and shows all the different transactions that are going on in the network, it's also programmable. So people Chainlink or Polygon can write smart contracts that attach to Ethereum. If Polygon can remove a lot of those transactions and make it faster, great. Then they'll probably do rather well. And if you notice the price chart, let me see if I can bring up Polygon. I think I might actually have Matic. Yeah, here's Matic. Another nice day today for Matic. I can get rid of my old drawings here. We were looking for the breakout on it, and we got it. So there's Polygon or Matic, looking good. Right now, actually at a potential sell point, in my opinion, at $2.20 as it came into some overhead supply. But, you know, this is doing really well because Ethereum is just bogged down. And you notice that was Matic doing really well before that? No, it really wasn't. It's because of NFTs. The whole NFT boom is what's making, in my opinion, Matic really just start to blow up because it's saying, hey, you know what? We can alleviate the pressure of Ethereum and do a lot of transactions faster and cheaper than you would on Ethereum. There is a problem, though. Ethereum is switching from Ethereum to Ethereum 2.0. They're going from proof of work to proof of stake. And in doing so, their transactions, once they go from proof of work to proof of stake, which is slated to happen next year, transactions should increase by a factor of 100. So now all of a sudden, if I'm a consumer right now and I want to trade on Ethereum, I have a lot of fees to deal with. So it's in my best interest to pay to convert to the Matic token, move my crypto into a layer 2 technology, and perform transactions there, right? Do those transactions on that layer 2 because it's cheaper for me, especially if I'm doing a lot of transactions. But let's say in Q1 of next year, Ethereum switches over and successfully goes from proof of work to proof of stake, and now it doesn't do 15 transactions per second, it does 1,500 transactions per second, which should alleviate a lot of the stress. Not all of it, but a lot of it. That's more inclined for people to go back to Ethereum and use it. Then, later next year, Ethereum is also planning on doing what's called sharding. Make sure I enunciate that one. I don't want anyone to think I said sharding. That'd be really weird. Sharding, S-H-A-R-D-I-N-G, which would now increase it by another factor of 100. So in the period of, let's say, 6 months to a year, Ethereum could go from 15 transactions per second to 1,500 transactions per second to 150,000 transactions per second. At that point, will Polygon be necessary? Will Matic be necessary? Will a layer 2 technology need to be there if the base layer can do far more faster and potentially cheaper transactions? That's my only concern, Lee, with Polygon is down the road, is it going to have its utility? Right now, it absolutely is needed. It absolutely is needed right now. But if Ethereum pulls off their plan, I don't think Polygon's needed, and that layer 2 technology may suffer for it. Let's see what questions we have here. Merlin, do you like AXS? I'm not familiar. Let me look it up here. I don't think I am. I don't think I know AXS. Oops. Oh, Axie Infinity. I'm sorry, I didn't know the ticker symbol. Again, this is a matter of personal preference, right? So let's see. Merlin, do you like AXS? If so, what exactly they're doing? Unfamiliar with it, but it caught my interest. I got to tell you, it's not for me. And matter of personal preference. So if you look at what Axie Infinity is, let's go check out Axie Infinity. And I don't have an account set up, but we'll just go here. So Axie Infinity has been blowing up price-wise. It's this stupid game. Look at it. And again, you might have some Pokemon people here, right? So if you got Pokemon people, this to me looks like a little bit more advanced in design-wise than Pokemon. And I know there's a ton of people like Pokemon. I think it's kind of silly. But anyway, Axie Infinity, you basically have these characters and you breed. You buy them, you breed them, you buy land, you battle for territory and for items. You know, I don't know. It's not for me. It's not really the place that I would want to be going into. But I think a lot of people will do it. Now, if we look at the price chart of Axie Infinity, this is where it just like shakes my head and go, wow, it's soared. So here is the price chart for Axie Infinity. It's up just under 1% today, $135 per token. Now, there's only 270 million of them out there, so that's actually pretty good. You look at what's happened over the past year, you know, this one has really caught on, and, you know, it's a basic-looking, cartoony, childish game. And, of course, those become very popular, as we've seen over the years. So I personally, it's not for me, But will it do well? I mean, it's already done really well. This thing was trading at $3 back in June, and it hit an all-time high of 160 back in mid-November. That's one hell of a run. I mean, damn it, why wasn't I in it when it was at $3? You know, we kick ourselves for that one. So AXS, Axie Infinity, not really for me. There's other gaming companies out there, or metaverse stocks I think will be much better. I actually got a question here that we'll talk about in just a second, dealing with more of the metaverse stuff. Izzy said, Merlin, afternoon, what companies or governments are using the blockchain and smart contract technology? A lot of governments around the world are using blockchain technology. It's just switching over the way that data is recorded. Now, as far as smart contracts, I think it's important for everybody to understand how significant smart contracts are. It's a digital contract, and it makes it very easy for us to do business. So, for example, we got Chris here, and Chris lives up in Northern California. If Chris and I make a wager on what the weather is going to be like on Christmas Day, I have to, let's say I bet him $100. I go, hey, Chris, I'll bet you that the weather in Santa Rosa, California, I'll go Petaluma, go to our hometown. The weather in Petaluma on December 31st will be no greater than 55 degrees, right? I don't think it's going to go over 55 degrees. And Chris is like, man, I live here. Merlin, you live in SoCal. You know what you're talking about. It's definitely going to be over 55 degrees. So we bet $100 each. In a traditional bet, how do I claim that? Let's say I win. Because, of course, I would win the bet. Right, Chris? I'd have to either have him Venmo me, and maybe Chris starts to, oh, well, I'll get to you next week. I'm kind of short on cash right now. With a smart contract, we both agree we put that money into a custodial account. We deposit inside. That's right, Alex. We got more P-Town folks in here. Deposit my $100 into an account. Chris deposits his $100 into the account, and then on that day, there's an oracle built into the smart contract that says, I'm going to go out to wherever we decide, weather.com, and tell us what the weather is. So if that weather is 55 degrees at any point on December 31st, automatically that money goes over to Chris. If it's anything below, it goes to me. That's a simple wager contract, but you can see the application here for business contracts, for government payment contracts. Like, I would love to see our infrastructure bill being done with smart contracts where the money is literally in a custodial account and it has to go to the exact location that our elected officials said it was going to go. Right now, all you and I know is $1.2 trillion just got dished out to somebody. Didn't go to me. Anybody here get a check from Uncle Sam? So Big Eb says smart contracts put a dent in escrow. Here's another great application for it. If anybody here has purchased a home, you know it takes some time. It can take months, potentially, for your transaction to be completed. But what we can do is we can create a smart contract that does everything that your broker and title agency do, which is verify certain pieces of information. So we could have the oracle check instantly and verify if all these things are in place. And if all those pieces are in place, boom, here's your keys. Because you put your money in the custodial account, and then the smart contract verifies that all of it's done, inspections are done, blah, blah, blah. Boom. You could have your transaction done in 10 minutes. I'm stretching things here a little bit. That's the future. But what if I can condense it down from 2 months into maybe a week? I think we'd all see that as an improvement in efficiency and speed. So it's smart contracts, it's rental properties, it's, you name any aspect of the business world, that's where it's happening. So it's blockchain, it's smart contracts. Again, it's not cryptocurrency per se. It's the smart contract application which connects to the cryptocurrency or decentralized asset market. Well, NJ, that's just one aspect of it. That's just one aspect of it. I'll give you, to me, one of my favorite pieces, and I've talked to you guys about this one before, I feel like I'm probably repeating, but I'm passionate about it, and I think it would be very important. I am disgusted with our voting system. Every year, the Democrats are screaming that there was voter fraud if a Republican wins, and every time the Republicans scream there's voter fraud if a Democrat wins, right? It's all scam, lies, dead people are voting, and, fraudulent ballots. It's a bunch of crap. I don't trust the election system. I go out and vote every time, but I still think it's a crock. It's an embarrassment. It's a black eye on our country, in my opinion. But if we can get it onto a blockchain, and again, I'm actually invested in some companies that's what they do. They are creating a blockchain technology where on your mobile device here, there's my boy, hi Bobby. On my mobile device, on election day, instead of having to take half a day and go down to the voting office or go to the school to vote, I can go, oh, hold on a second, I got to take a 2-minute break here, log in, I put in my private key, which can only be me, used one time, put in my private key, I hit all the different people I want to vote for, I hit submit, and then with 100% accuracy, in under 1 minute, I can see every person who's voted around the United States for every initiative, every county, every person, real time, no manipulation, no bullshit. Not only that, but I don't have to listen to CNN and Fox and all these TV stations pontificate about who they think is going to win that election. It's so annoying, but they make money off that stuff. So I think that there's great application for it in the voting world as well, where we have smart contracts, but also using that blockchain technology. How do I see future government legislation and regulation affecting crypto markets? Great question. That one is going to require a drink of water. Well, clearly clearly the crowd is not interested in the topic today because I'm losing viewers as quickly as possible. I love it. Anyway, regulation is a double-edged sword. So right now, it's kind of the wild, wild west with regards to cryptocurrencies and digital assets. If you look at what's happening, there's the potential for two things to happen in particular that could vault cryptocurrency to the stratosphere, and that is government regulation. Number one, they're going to start to regulate stablecoins. If they regulate stablecoins, that means they're going to have to give us protection. Right now, I can take a stablecoin, let's say US dollar stablecoin, and I can go get 10% interest on that thing right now. Why would I keep my money in a bank? Well, I keep my money in a bank because the bank is FDIC insured. My stablecoin is not. But right now, the FDIC is looking at stablecoins going, we should be protecting and insuring those ones right there. So to me, that's important, because if all of a sudden we have stablecoins regulated and protected under FDIC insurance, would you want to keep your money sitting in a bank when you could make 9% more somewhere else? I'm going to stablecoins. And then also, if they start to declare things like Ethereum or Polkadot or Cardano as a security, then that means that I should get SIPC insurance. So I think regulation is actually great. I know it sounds crazy, don't let John O'Donnell hear this, but regulation of crypto is great depending on the extent of the regulation. Too heavy of a hand will thwart innovation and push people out of the US. A gentle hand, meaning they want their tax revenue from it and make sure that the average investor doesn't get screwed because of deceptive shysters, which there's plenty, that would make the industry grow exponentially. So, Iftikhar, to me, I think regulation is actually, I'm looking forward to it. I think it's good. I think it will create better adoption, protect the investors by giving them protection on stable coins and also securities, and protect me and my portfolio. So I think it's going to be great. You don't think Dominion is legit? You mean the voting? I don't know. I don't trust it. It's not transparent. I want transparency. I would like to see in one quick button I can hit, see everybody who's ever voted. No one, they won't tell you none of that stuff. No, I don't have to see who voted for who, but I think when you have it on a blockchain, you're not going to be able to mess with it. Dominion or voting companies in general can do whatever they want behind the scenes, and I have no clue. I'm sure there's some oversight, but I don't know. It seems a little too fishy to me the way voting works. Okay, so Lee, that was my thought. That was a long-winded answer to the Polygon question. Layer 2 technologies to me are great, and they're needed right now. Will they be needed down the road? I don't think so. I just don't think so. Big Eb says, ever wonder why Jamie Dimon dings crypto? You know, he has been hammering crypto for a long time. And if you look at his firm's holdings, not only are they buying cryptocurrencies at JP Morgan, they're selling crypto products to their customers. So just the fact that Jamie Dimon individually doesn't like it, he is significantly involved in the cryptocurrency space as a company, big time. Thanks, Tracy. I'm not so worried about it. I just like to do topics that people are interested in. I thought we had a bunch of crypto questions, but anyway. So, all right, this is a kind of a complex one. Tim says, could you speak about what crypto exchanges to use and hold assets in to gain interest? What criteria do you use to qualify them as reputable? I found a couple of exchanges that I don't think I've heard you mention paying high rates, Nexo and Midas Investments. So one of the things that we use in the CIL, we built a spreadsheet. And this spreadsheet is designed kind of to show you in a very easy way which exchanges, and granted, we're only using a few. There's certainly a lot more out there. I'm only using a few of them. But which exchanges give us the best rates? Where can I get the best rate of return on my money if I deposit it? And to me, there's a huge advantage there. So one second here. We're gonna bring this sheet up for you. 1 second. I'm just gonna try to find it. Find it and talk is a tough one for me to do right now. Apparently, where is this document? Oh, there it is. Took me a while to find it. So, if you think about rates of return or how much you get by keeping your money sitting at a bank account right now, you're not making much. But we use this spreadsheet here, and I've gone out and I go to a whole bunch of different exchanges, Tim. I go to a lot of them. You can see I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I think 11 or 12 different exchanges. And granted, there's dozens more. I think there's over 400 different exchanges right now, but a lot of them are really shady. So how do I qualify them? Well, I'm looking for reputability in the industry. I'm looking for social media presence to make sure they're legit. I'm also looking to see from review sites, has anybody been hacked? Has anybody had issues pulling money out? Are there crazy fees associated with it? What are the challenges here? So, I'm not showing the names of all of them because I'm going to keep that for my group in the Crypto Investor Live program. But you notice that there's all these. They're paying a lot of money for you to keep your cryptocurrencies at their exchange. There's Polkadot, for example, 12% rate of return for Polkadot by keeping on this exchange, or this one, or 15% here. Well, why wouldn't I do that, right? Why wouldn't I keep my ass? If I could tell you that right now, if your Microsoft shares are sitting there, move it over to another broker and get paid 5% on the total value of the position, you'd move it right away. As long as you knew the risk, right? It could, there's the potential for theft, etc. But to me, the risk is worth the reward in the crypto space. So, as far as which one's the best, look, Nexo, I'll just tell you off the top of my head, Nexo. I do use Nexo. It's okay. Midas, I don't know Midas. I actually looked at that one yesterday. Let me see if I can bring Midas up for us here. And I'll tell you why I think it's kind of shady. Midas Investment Group. All right, so let me bring this up for you guys so you can all see it over on there on that screen. Are cryptos for Nike Stratus? Any cryptos? They don't have, Nike doesn't have their own cryptocurrency right now, no. But here's one that bothers me. So you go here and it says 17% APY on Bitcoin, 23% on Ethereum. This it's outside of industry norm. So that's the first thing. It's way outside of the industry norm to get these 23% rates of return. It's too much. So, for example, right now, the best that I'm getting at this exact moment is 6.2% for my Bitcoin holdings. So I've got some Bitcoin making 6.2%, a bulk of it's making 5.75%, and the other is actually sitting in cold storage, not connected to anything. There's an old phrase that says you cannot get more reward without taking on more risk. So if I'm at decentralized exchanges or even centralized exchanges that are paying me at best 6.2% for my crypto, and I know they're legit, I've vetted them, I've checked their addresses, I'm making sure that the people who work there are real, not fake. But then I go out here and I look at this guy and they're charging me going to give me 17%. Right away, I go, I want it, but there's got to be a catch. There's too much risk to be paying you 17% for Bitcoin. Because if you understand what they're doing, is they take your cryptocurrency here and they lend it out. They lend it out to somebody that's paying them more than 17%. But this is like a loan shark. It's like a junk bond. Why would I pay 17% to borrow cryptocurrency when I can go to another exchange and be paying like 6 or 7? So I feel what's happening here is they're trying to entice you in with these just juicy rates. Look, 19% for a stable coin. DAI is a stable coin. It's supposed to be pegged at $1, and they're going to give you 19%. So you understand how enticing this is. Right now, if you're in the United States and you have your money sitting in a savings account, you're getting like 0.1%. And they're now telling you, go to a digital dollar and we'll give you 19. Most people are going to be trampling each other to get that kind of rate of return. There's something fishy here. I think it's just a little too crazy to jump onto. It makes me a little bit wary of this one here in particular. So it's not to say it's a scam. I would definitely go through my Midas and do as much research as I could. Like, where are they from? Are they in the US? Are they foreign? What are the reviews of it? Has anybody, again, been talking about how they can't pull their money out? This is something we've had a few people in the Crypto Investor Live program who have said, hey, I had a nice rate of return going, but I can't pull that money out. Or they wanted to charge you like $1,000 withdrawal fee. It's like, but there's only $10,000 worth of, you want a 10% withdrawal fee? That may be in place here. So they'll always try to get you with fees. Don't be so quick to go, wow, 17, 18%. It sounds great. I just be very careful with that. Really, really careful, because I think that what's going to happen is you're going to need a lot more scams, a lot more people getting lured into this stuff and losing a lot of money, if not all of their money because of it. Let's see. I had another example here. Maybe I closed it out. I'll give you one more. Where is it? All right, well, I guess I closed. I had a window open that had this really crazy. They were charging or paying like 700% rate of return on stuff. And I'm like, hopefully I had it. Apparently it's gone. All right, I closed that one out. My bad. All right, let me keep going to questions. I want to make sure I get through these. And again, I will be reading and answering your questions along the way. Are there any benefits of running a Bitcoin node other than supporting the network? No. Nope. If you run a Bitcoin node, you're just helping the network. If you're a miner, then you get rewards, right? They're essentially doing slightly different processes, but they're both there designed to maintain the network. So I have a node. It's just because I want to support the network. I'm not a miner because the electricity costs are just too much. All right, let's see. Thanks, Big Eb. Merlin, do you use circulating supply, max supply of coins? Yeah, absolutely. Absolutely. So in the equity markets, we have a thing called float and outstanding shares. Float is what's available to the public. Outstanding shares is what exists total. A lot of times in the equity markets, those numbers are pretty close. But I'll give you an example. One of the ones that sticks out for me is kind of being noteworthy. And we do a review process in the CIL where we have a whole spreadsheet. And this is one of the criteria is exactly this. It's called tokenomics, right? Making sure that those coins are distributed in a manner that's not going to come back and bite you in the butt. Ripple. Anybody here a big fan of Ripple? Got a bunch of Ripple lovers in the house? Yes, Ripple. It's going to go to $5 this year. Okay, cool. It might. But there's a huge fundamental problem with Ripple. And that to me is exactly what Kev says here is it's the tokenomics. So let me bring up a page. See if I can bring this up for you guys over there. And I'll bring up Ripple. So let's see where Ripple should be up here at the top. Here's XRP, right? Number 7 in the world in the crypto markets. A $46 billion market cap. Tons going on. Notice right here, circulating supply. 47 billion, 216 million, 103,219. Whew, man, my math teacher would be proud of me for that one. That's how much is circulating right now. Now, if I said, is that a lot or a little? I don't know. It's all relative, right? The difference now is you look at circulating supply, and then what's total supply, right? So I'm going to click on this, and total supply is 100 billion. So that's telling you that there is 52.8 billion Ripple that's available to come to market. And that's held by Ripple Labs. So this should scare the hell out of anybody that wants to buy into Ripple. Because in theory, hypothetically, if you owned Ripple right now, let's say $1, rounding up, you got it at $1 and you're thinking, cool, it's going to go to $2. But Ripple Labs says, you know what? Let's unload this 52 billion Ripple. And they flooded the market all at once, which would be idiotic to do. I'm just creating a hypothetical. But if they flooded that market all at once, what's going to happen to the price of Ripple? You're going to be under a dime. This thing's going to crash so big. So anytime you have a tokenomic situation that looks like that, where you have circulating supply is one number, but the overall supply is absolutely massive, that's scary. It's also important to look and see who holds what, right? Part of the analysis process, you can go and see who owns what cryptocurrencies and how much of it, right? That's a good question. So I definitely look at that, Kev. It does factor into my investments, especially the long-term stuff. Are there any? Okay, got that one. Let's see. Used car. Nike is building a metaverse using Roblox. Well, Nike is getting into a whole bunch of different ones. So they're all getting into Sandbox as well. Yeah, Roblox, I would say Roblox, I've talked about this one before, it's almost like a game aggregator. I don't think they're that great. You look at something like the Sandbox or Decentraland or different metaverse companies, those are, to me, way better. And they're also involved in those arenas as well. Are those places U.S. regulated? Must be hard to do these taxes on these stuff. So a lot of them are not, right? So anytime I'm outside of the U.S., I get real nervous. So for example, using something like KuCoin, who's out of Singapore, makes me nervous. Using something like Nexo, it's out of Switzerland, so I feel much more confident there that the reliability of the company is solid versus something like Romania. But still, outside the U.S., what am I going to do? Fly to Switzerland and be like, hey, yeah, you guys took my crypto. If it's in the U.S., I have some recourse and government stuff may help me out. So it's kind of most of the exchange stuff I do is in the U.S. Let's see. ZK rollups. Next big thing. What are they? Ooh, that's a very complicated question. It's just a way for us to... it's called a zero knowledge proof. So there's zero knowledge, ZK proofs, ZK snarks, which are just different technologies to prove something without having to expose any of the information. And what that allows the network or system to do is process a lot more transactions, because all a ZK rollup is doing is looking for bad transactions, not necessarily verifying all the good ones. It's just saying, let's look for bad things. And that's in a very basic nutshell. I could geek out and go way more in depth, but I just don't have time to go into full ZK rollups. That's actually something I'm saving for my crypto investor class, where we dive into ZK rollups and the different technologies to help speed up the network. That's one of the technologies that Vitalik Buterin is very big on, is ZK rollups and ZK snarks and zero knowledge proof. So it's just a technology to help speed up the network in a nutshell. With Metaverse being the hot sector right now in crypto, DeFi looks pretty beat up. Do you think that money will switch back into DeFi down the road? I think you'll constantly get an ebb and a flow type of piece. I think that money will pour back into the DeFi markets. There is questions from regulators on DeFi right now, so that to me makes it a little bit questionable. That said, I'm not scaling back my bets. I have some bets on DeFi space, DeFi technologies. I'll keep those. I'm not pouring into those. I'm going more of my money is pouring into the smart contract aspect, and also is going to start pouring into the Metaverse and that market. What percentage of your crypto would you consider safe to hold out of cold storage for staking and lending? To me, it's all about opportunity and opportunity cost, right? So I'm keeping a good chunk of my Bitcoin on cold storage just because I want to make sure that no one can touch it. If somebody were to come into Kraken or Coinbase and all of a sudden freeze all my assets for whatever reason, I don't want that. So I'm being safe with that. And that amount that I pulled out is like 3 times what I initially invested in crypto all the money I put into crypto overall. I got triple that saved in Bitcoin on a cold storage device. Everything else, I'm building more and more. So I'm letting it continue to grow. And again, how much should you keep on cold storage? It's just a matter of personal preference. It's up to you. I think the more we learn about the exchanges, the more we learn about the rules and regulations and theft. Coinbase got hacked again recently. It makes us less comfortable keeping our stuff on these exchanges. So I love cold storage. If I can put things on cold storage and actually stake from that device, for example, my Tron and some of my Polkadot, I'm staking from a cold storage device. So I physically own the crypto, but I'm basically lending it out through a cold storage device that's not controlled by a centralized exchange. Way safer for me. A few examples of smart contract plays. So the main players in the smart contract space are going to be Ethereum is number 1. I guess you could say Solana would be number 2. You've got Cardano as a smart contract player, Algorand, Avalanche. Those are the heavy hitters in the space. You've got Luna as well. So, and you notice that the charts of all those have been like straight up because of just, I think the inefficiencies going on at Ethereum has created a whole new marketplace of opportunity for companies that came in with new technology. And really what you have here is you have old technology, granted 2014 or 15 is when Ethereum was written, old code, which is slow and uses proof of work. All of these new ones are using either a directed acyclic graph, hash graph, or proof of stake, or some combination. Those systems are inherently faster. They're just not as safe. They're potentially less secure and lead to more centralization. That said, these new companies like Solana, they can start off with a faster piece of code, and that's what's happened. Ethereum is having to rewrite and modify their technology and code to fit for demand, whereas these new companies start right off from scratch. So it's been interesting. You would think there's this big barrier to entry that nobody could catch Ethereum, and here all of a sudden, companies are jumping on right away and getting huge market adoption. Do you see render on Binance now, Merlin? I was going to grab some. I didn't see render on Binance. I'm going to buy some. Render is probably the number 2 on my list. And RNDR. So here I'll bring up the chart for you guys on render. And this is one I'm kicking myself on. So I hope it falls another $1 because 450 is like my first buy point. But look at the last 3 months on render token, man. This thing was trading at $1, and I had it on my screen since 2016. Oh, sorry, 2018. I think it was maybe 18 or 19 when my buddy was like, "Hey, you have to check this out. This one's awesome." I cannot believe that I didn't jump on it. But render will be one that I'm definitely adding to my portfolio without question. It's just a matter of time. I'm hoping this pullback comes down, as you can see right in this little this sell-off point that goes all the way back into November 16th. I'm looking for that next pullback, and then I'll buy some there. But yes, definitely looking to buy some render. I didn't see it was on Binance. I don't use Binance anymore, but if it's there, cool. I'm using to buy it. I'll be using KuCoin. And then let me go. I had more questions. Damn it. I went down the rabbit hole of crypto. Dan says, "Hey, Merlin, I'm trying to get into Decentraland. What hardware do you think I should have to make it run smoother?" Look, most browser-based applications, and that's what Decentraland is, browser-based. Most of them, it's not about your personal computer's like CPU. It's about RAM. So I think as long as you have a decent CPU, it doesn't have to be the cutting edge, top shelf thing, but just have a good amount of RAM. Like I have 32 gigs of RAM on this computer I run here, so I'm okay with that. I haven't had many skips. However, I think also part of the reason you may get choppiness is because of their network, right? Maybe not streaming effectively because of demand, but for me personally, I think you just look at increasing your RAM on your computer. And I think that's going to do it for the crypto questions. I get to everybody. I know there's a bunch of questions that came through. Iftikhar, I got your legislation one. Any other last minute questions I can get to before we wrap up here? Man, that was a quick hour. Let's see, there was a couple other really interesting ones. I wanted to show you something here real quick, just to show you how dangerous this ecosystem can be. Here is, of course, we talk about Axie Infinity, but here's Radium. So if I go to Radium and I go into pools, I know what's going to happen is a lot of you, or we can go into farms actually. A lot of you are going to look at this and go, "Good God, man." Here's an APY. I don't know if you guys can see that number. So if you take your liquidity tokens for T USDC, so there's like these multiple layers of things that you have to do, right? You have to do all this crazy crap to get to deposit in a liquidity pool. And when you do, they give you tokens. And if you take that token and you deposit it here, they're looking at making 1,180% rate of return per year. You look at these rates of return, and that scares the hell out of me. I have no money in liquidity pools like this. It just makes me a little too nervous. But unfortunately, there's a lot of people that do jump on this, and there's some significant risks. There's a thing called impermanent loss, which is a major factor. You have potential smart contract problems because a liquidity pool is a smart contract. But yeah, these types of rates of return just scare the hell out of me, especially because I know how people think, and they'll look at those numbers and go, you probably wrote it down right now. Radium farming, I'm going right now. There's tons of them out there that do this type of thing, and it's crazy. Let's see. What other coins am I looking to buy on the pullback? Number 2 on my list is Sand. So as I told you guys, I like the Sandbox. I think what they're doing is pretty awesome. Sandbox just doing their alpha version right now. I might actually try to maybe play some later on. I got a presentation I got to give tomorrow, so that'll be the determining one. But you look at Sand here. I mean, you can tell Sand has been on fire. I mean, you can go back just to October. This thing was at 75 cents, and it just broke 8.50, right? So I've got a level mapped out both on Render and on Sand, right around that $4 to $4.50 mark is the only two I'm really interested in buying. I may actually add some more to my Polkadot position. You know, we bounced off it the other day around 33, and I didn't buy more. I just I don't know. I was thinking we may actually see a bigger sell-off. We'll see. If we get back down here into the 33 mark, I'll probably add some more DOT to my portfolio. I've got a pretty good amount, but I could always use more. But let's see. Just because Tom is friends with Big Eb trying to make me go over an hour here. Let's see. Adam says, my bank account denied KuCoin for some reason. I need to call them. Yeah, get used to it. Probably the easiest thing for you to do, Adam, is send your money from your bank to a U.S. exchange, and then once it's there, put it in a stable coin or Bitcoin, and then move that Bitcoin over to KuCoin. It's easier that way. KuCoin will accept it. It's your bank that's got the issue, and I think that's a regulatory thing. Is land that is being sold in the metaverse really finite? Couldn't Decentraland just expand or a new metaverse world to be created? Yes. And that's the big thing for me. I look at it and I go, I want to buy real estate. But they could just simply go, you know what, we're going to make it even bigger and boom out, which of course they will do. I mean, if you look at Dubai, we're talking a real city. I don't know if anybody here has been to Dubai or is from Dubai, but Dubai, if you go back 50 years, Dubai was a small little village, right? It wasn't anything big. And then all of a sudden money came in there and they just kept going boom, boom, boom. And now it's huge. And it's crazy part about Dubai is if you're driving down the street in Dubai, going out of the city, it's skyscraper, 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 skyscraper. And then all of a sudden, it's like it just stops. And it's just nothing but sand as far as you can see. And you're like, wait a minute. This is weird, man. Yeah, and same thing in Decentraland. They will just keep building out and these different metaverse yes, I definitely think that's a problem. I think it's hot right now because the metaverse, they're going to keep it small until demand really starts to surge. And I think they'll slowly build it out. Let's see. The market for the metaverse are the players of Pokemon, Dungeons and Dragons, Second Life, Farmville, Fragments of Crypto. Am I right? I think that there's certainly a lot of that in there. There's absolutely a lot of that in there. But make no moans about it. The gaming world is massive. The amount of money in the gaming world. I mean, I have an ex whose boyfriend makes $300,000 a year playing that Magic the Gathering card game. So if all of a sudden we start to create, and it becomes much more public, that, hey, in these games, you can make a living. You can make good money in the game. Maybe I can have a couple $100,000 a year job in the game doing whatever. You're going to bring in a lot more new people. So it's not just that it's, gamer goobers, right? It's people who are, interested about it. But I think that there's a lot of draw there. And I think it's a multi-trillion-dollar market. I think the metaverse is multi-trillion, not only because of the people who play it, but sponsorships going in there. And all of a sudden, you might have a piece of property, and Coca-Cola says, "Hey, can I put an NFT billboard on your property?" And you're like, "Yeah, pay me, 1,000 Ethereum a month." I mean, that's the craziness that's going on here. They're building a second Dubai. Isn't that called Abu Dhabi? I know Abu Dhabi is right down the road from it. Am I using TradingView to look at the charts? Yeah, for now, until it's in CliK. Once it goes to CliK, then I will be using CliK for my analysis, but it's just easy in TradingView. One thing, just make sure that when you are installing or looking at different cryptocurrencies in TradingView, make sure it's the liquid exchanges. Sometimes you'll type it in, and it'll bring up an exchange that's very illiquid and doesn't give you much liquidity, which means bad pricing. How many push-ups do you do per set, adding up to 100 reps? Are you doing them in Metaverse? Damn you, Tom. I'm doing them in real life right now because I have probably taken like 5 or 6 months off from doing push-ups. I'm only doing 20 per repetition, so I do 5 reps of 20 for now. Hopefully I'll get back up to doing 50. 50 was my max, so try to do it in 2 sets, but there we go. Cool. Well, we had a crypto AMA, a lot of questions asked. Hopefully I got to most of your questions. I know there were some that you guys probably wanted a little bit deeper answers on, but for the sake of my students, I'm not going to go that deep here, but we kept it kind of high level. Some good stuff, and I think there's plenty of opportunity in this space. Part of me thinks like Tom does, which is, it's just a bunch of snotty-nosed goobers playing, Dungeons and Dragons and Minecraft are going to be in there. Yeah, there's a lot of that, but I think it's bigger. I think it's bigger than that. I think it's a little bit different than a traditional gaming environment, and it's still defining itself. I love the way that you can combine the metaverse aspect, meaning they create their own little world with real life interactivity. You look at something like Pokemon Go, where I can actually hold my phone up, but I can see the world in front of me, and there's little Pokemon in it. Take that one step further with the metaverse, and there's infinite possibilities. It's kind of exciting. I know at the beginning it's going to be clunky, but I'll tell you what, if we look back at 5 or 10 years down the road and look at what's going on in the metaverse, I think it'll be commonplace. I mean, I foresee people having in their living room a couple of just very, very light paper thin headsets like sunglasses, and you put those on, and your whole living room transforms into whatever you want it to be. And everything in your house, I'm looking at my living room right now. I have a very large open living room space. And I can picture putting on these goggles, and my house is 100% accurately mapped. I'm talking every plant, every lampshade, every rug, carpet, table is perfectly mapped. So I put on that headset, those visors, and I can say, snap of fingers, take me to Paris. And it will automatically make my house look like a Paris scene. And I don't have to worry about bumping into stuff because the glasses are perfect. It's like it's an augmented reality, or pick any environment you want. To me, very cool to see that type of change happening down the road. Granted, I think that type of technology is at least 5 years out, but it's coming. And I think that there's opportunities to invest in that space, and I'll let you know as soon as I grab some in the Metaverse. Right now, I'm not in the Metaverse, unfortunately. So, all right, guys, that's going to do it for me. Tomorrow is our weekend edition, which means a nice frosty glass of whiskey. For those that enjoyed today's show, do me a favor, give me a thumbs up. If you didn't like it, well, give me a thumbs down. But if you do give me a thumbs down, go out to TraderMerlin@gmail.com and tell me exactly why you decided to give me a thumbs down. So maybe I can improve the show. If you want something covered tomorrow or a future topic for the show, TraderMerlin@gmail.com. Until then, happy trading, everybody. See you tomorrow.